We are up by nearly 4% in the first week of October itself. If last month was all about Hurricane Ida, this month the start clearly has been because of the OPEC and allies. The meeting is out of the way, and for next 1 month, mostly we won't hear from them. But until then, it really is going to be about the demand, supply, inventories, which the crude prices will continue to react to. So even with some bit of a profit taking, we still are trading at a 3-year highs for Brent and a 7-year highs for the US crude prices, and $81 per barrel is holding for this one. Joining to talk further about that is Peter McGuire, CEO of Exim Australia. Peter, hi. What a run-up in crude, and 80 is done, and we are trading quite comfortably above that now. And most of the global crude traders now believe that it is going to be anywhere between 75 to 90 on the higher side, that we might see crude prices ranging within for 2022. What kind of demand scenario are you looking at, and what about supplies?
Well, Manisha, I think a couple of things. It's snapped. The run-up has just been absolutely, I think it swept everyone away. I think there are a lot of traders there that would have been hanging onto their hats and saying maybe 76, 77 was the top line, and now it's, at 82, there's every chance you see an 85, 86 handle sometime over the next, couple of weeks. As far as demand, yeah, that's the issue. Airlines, huge. Everyone's back on track. We're in a lockdown here in Sydney, but the rest of the world seems to be very much galloping ahead and putting COVID behind it. And so in turn, you're going to see airlines, you name it, the consumption side, I think, is going to be very strong over the next matter of, 3 to 6 months.
Peter, I was reading a report that, yes, you would be looking at energy transition and EVs and etc. But jet fuel demand, how do you replace that? And that would just perhaps continue, and the usage of crude in various industries. So would you say that even with all of this EV conversation, the demand for crude is not going away in a hurry?
No, it's not, Manisha. Look, as far as the airlines, I'm sure that you're going to see them crisscrossing the skies with a lot of frequency over the next matter of months as people resume their lifestyles and holidays and, travel. So I think that that's going to be definitely an increase. The second, and that's very much across Asia and India, of course. And then you're looking at the next part of it. The overall theme out there, I think, is one of fairly strong. I'm worried about inflationary numbers, and I'm worried about a little bit of stagflation. So there seems to be the disconnect, but overall, the global economy is doing quite well. So I've got to say that 22 could be a relatively good year, unless we see a hiccup.
Peter, you mentioned that in next couple of weeks or in this month, we might be looking at that 85 handle as well. Is it sustainable, though, in the very near term?
Well, Manisha, that's the issue. We've had, when you're looking back at what we've experienced over the last couple of months, the supply issues leading into the likes of Europe, and you're coming into the winter period, I think consumption is going to pick up. Is the price, what happens with US dollar? There's another 0.94 at the moment. So if that US dollar comes under a little bit of pressure and it peels back a fraction, then I think you've got the potential to take, that 80 to 85 sort of trading range. How long does it stay there? No one knows the future, and what we saw, imagine that, hit us pretty early in the morning, that whole Facebook, Instagram sort of meltdown. You couldn't get on the platform. So if you see big web outages or any other things like that affect markets, then that creates a lot of uncertainty. So you've got to think, well, what are the black swan events that can change the argument at the moment?
Oh, well, yes, never a dull day, isn't it? Thank you so much, Peter, for joining us.